And this is similar when weighing up oil per ounce of gold or any other tangible for that matter. But it's the housing market that touches most everyday people. But also it's a valuation metric that drives the BRICS central banks to bolster their currency with deeply undervalued physical gold. So there is a relevance there.
Again, fascinating, Andrew. I always say that this is you can't get this information anywhere else. And Andrew, just before we started recording today, you highlighted a real interesting gold price benchmark, and I think this would really be of interest to all of our members. Can you run through these thoughts that you had, please?
Yeah, and really this is a great illustration as to how officially managed the dollar price of gold price is versus the dollar, the pound, the euro. I mean, pick any currency you want for that matter. And following 50 years of COMEX-driven paper market dilution, in the real world, when we benchmark gold's purchasing power versus all these fiat currencies, we just have to look at that and say, let's pick the housing market. And this is similar when weighing up oil per ounce of gold or any other tangible for that matter. But it's the housing market that touches most everyday people. But also it's a valuation metric that drives the BRICS central banks to bolster their currency with deeply undervalued physical gold. So there is a relevance there. Now, looking at the hard data, and even when factoring in the last 50 years of officially sanctioned COMEX price suppression to water down this comparison, let's just look at, for example, the UK price data as a benchmark. Look, there's very similar comparisons in the US and most Western economies, but it's just something that is tangible and available and auditable. So in 1953, it took 150 ounces of gold to buy a house with an average nationwide determined price in 1953, it was £1,800. Now, 69 years later, in 2022, it only requires 180 ounces of gold to buy the same house with an assessed nationwide price of £275,000. Now, this equates to a gold inflation rate, including the dilution of the COMEX, of just 0.29% a year versus 20.29% inflation in the fiat currency terms. Now, it is this erosion of fiat purchasing power versus hard money that's not going unnoticed by global central banks busy converting Western diluted paper gold into physical gold. What a good hedge. And if gold was priced correctly, if we used historical valuation metrics, gold collateralization of US foreign obligations has reached historic lows. We've looked at this before, and the current ratio of gold to foreign debts is around 6%. The ratio is so far under the 20 to 40% historical average, which with the BIS, and with the BIS likely expects this ratio to ultimately revert to following the full implementation of Basel III as we move into 2023, restoring this 20 to 40% ratio of gold to foreign debts outstanding from current levels easily puts gold somewhere minimum $6,000 to $12,000 per ounce. Now, even if we took the lower band of 6,000, it would take less than 50 ounces of gold to buy the same house, which in 1953 cost 150 ounces of gold. I mean, the question is, okay, so where does that put silver? The gold-silver cross is unbelievable. I mean, when you look at it and you say 84 to 1, after it's been 120 to 1, 84 to 1, it was 85 to 1, 86 to 1 the other day. But even if we take that at face value and we don't adjust that, that puts silver somewhere between 70 and 140 bucks right now. While if we were looking, essentially, if we then were to look at the historical average of 16 to 1, I mean, where would you can pick a number as to where that puts silver, but certainly somewhere in maybe the $375 to $500 range. I think people can just pick a number, to be honest.